Thanks so much for tuning into this earnings conversation with Astral. Their numbers 16% revenue growth, margin expansion of nearly 400 basis points, and the profit after tax up 75% to 131 crores versus 75 crores. This ED and CFO, Mr. Hiranand Savlani, joins in to talk about the numbers. I reckon, Mr. Savlani, thanks so much for taking the time out and joining us, and congrats on a good quarter. What do you think was the highlight for you this quarter?
I think quarter was all respect, it was good. Whether you pick up the pipe business, whether you see the adhesive business, whether you see the sanitary ware, everywhere the growth was there compared to the last quarter. And the best part was that in spite of so much of volatility in the polymer price, in fact, we incur some losses also in CPVC. In spite of that, our margins were fantastic. If I adjust that 20 crore rupees of CPVC loss and 4 crore rupees of bathware loss, I think then the numbers were fantastic and we are very, very excited. And to see the volume growth, 28% volume growth. Last quarter also, it was a high growth. So in first half, we have done almost 29-30% volume growth against our guidance of 15% volume. I think in all respect, quarter was fantastic for us.
Yeah, I remember at the end of quarter four, you had said that while we are guiding to 15%, but we may do better. But you had also said at the end of quarter one to my colleague Sajid that if Q2 also turns out to be strong, then you might be tempted to revise your guidance, either on margins or on volumes or on a combination of both. Are you doing that?
I think now we are saying that we will do minimum 20% volume. We will try more than 20%, but this is the minimum guidance we are revising from 15 to 20. And we will definitely try good because the way market scenario is there, whether you see the demand across the board, demand is there. Very healthy numbers are coming from the construction, new launches and all. At the same time, you see the polymer prices are bottom. So that is also going to give you a better volume. The gap between the unorganized and organized is getting narrow because whenever the polymer prices are low, normally the unorganized player do the lot of mixing work and all, and that is how they are cheaper than us. So now the value of polymer itself has come down. So gap has become narrow. So that always gives the advantage in favor of the organized player. So that is playing in our favor. So I think all respect, I see that the coming time will be very healthy for the industry, and we are very excited that we will be delivering a good number in the coming time.
Okay. Yeah, the real estate sales as well as the infra spend seem to be higher. So therefore, that should play in your favor. I'm just tempted to ask you, what is the average capacity utilization, Mr. Savlani, across different segments? And you have, I think, one plant started in East India. You have a couple of other plants starting as well periodically. How do you expect this situation to shape up?
So I think this first half, our capacity utilization is 68%.
Okay.
And this 68% on enhanced capacity of 20,000 metric ton, which we added in first half. On that 68% utilization is there. And our Guwahati plant, which is started in October, so that capacity is not added in the numbers. So that another 20,000 plus kind of capacity will be added. We already launched the tank, and that is already, we started billing in the market. And pipe is shortly going to start. Right now, trials are going on. So shortly, we are going to open up the pipe also. So 20,000 metric ton will come from there. Another 70,000 plant, which we have planned in the Telangana, Hyderabad. So that will be operational in Q2 next year. And then this, our UP plant, Kanpur plant, which is 50,000 metric ton, which we have planned somewhere in Q4 of next year.
Okay. So at 68% capacity utilization, you are not stressed for capacity. I think it can go up to 80-85% before you have to contemplate other capacities, and they will anyways come on stream over the course of the next 2 quarters or 4 quarters. So therefore, on capacity front, you seem to be doing okay.
Absolutely no problem. We can go up to 80-85%. That is not a problem. And we have planned, Neeraj, in such a way that our 20,000 will come in the Q3, and then Q2, and then Q4. So our, if you see the historical last 15 years number, our second half is always excellent in terms of volume. So in our peak season, we have already added 20,000 metric ton, and today we are at a 68%. So absolutely we will not be facing any capacity related issue in the second half, which is our peak season.
Lani, it's good to be conservative. I'm trying to understand if you're being ultra conservative. You've done 29% volume growth in the first half. Your second half is better than your first half, and you are telling me that you will do for FY24 20% volume growth or maybe slightly higher. Are you being too conservative?
No, because our management is like that. We are always believing in communicating low and delivering more, and that is what we have maintained. And secondly, at the same time, Neeraj, we have to also see that compared to other companies, our last year base is high because we have consistently grown up. So in a peak season, also last year also we have grown. So our base is also high. So we have to be conservative.
Okay.
But that doesn't mean that we are not going to try 25 or 30%. We will always try for that also.
But just wondering, you still, I mean, whatever number you deliver, and there might be anomalies there, but you still believe that this year too, the second half has the possibility of being better than the first half?
Definitely, it will be better only because normally, historically, you see the second half is 55 to 60% of the revenue.
Sounds good.
First half is always 40-45%.
Okay. The other question that I have is that polymer prices, I believe, are lower and currently in your favor. Now, does it mean that margins can be maintained or improved? The reason I ask this because you had told me that you will keep a range of 16 to 18%, but if polymer prices are in your favor, you can probably even clock 20% EBITDA margins. Could that happen in quarter three?
Yeah, so Neeraj, it depends on the market situation. Normally, what happens that whenever the polymer price drop, we have to pass on to the market and we have to incur the loss on the inventory. And that is what exactly happened in the Q3 also. Because CPVC price dropped, so we have to incur the loss on the inventory to the tune of roughly about 20 crore and 4 crore is the faucet. So that's why you are seeing that the margins are low. Actually, margins are better. If you adjust this 24 crore, then the margins are much better than what is the delivered number. Actually, in the delivered number, this adjustment is not there. Now, coming to your further second question of going up to 20%, it is possible. We cannot rule out that thing, but we have to equally see how the polymer is going to behave in the second half. Personally, I feel that the polymer is almost on the verge of bottom out. So from here on, suppose hypothetically in our peak season, polymer prices start going up, then there are probability that we may get the inventory gain. And in that case, Q4 can be a very, very robust what exactly was there last year Q4. If you see the last year Q4, we delivered the number which was never expected by anyone because we get an inventory gain. So there are high probability that in Q4, if the prices goes up, we can get that advantage. So keep finger crossed because it is very difficult to predict the polymer price. So I don't want to unnecessarily float a grapevine that we will be able to deliver. It all depends on the polymer price. On the contrary, on the PVC side, I think in the first 15 days, polymer price has dropped by almost 15% in PVC. So that is where the problem is there. So I am expecting that the Q4 can be a surprise provided the polymer price goes up.
Okay.
And the chances are.
Okay, fair call. Last couple of questions, Mr. Savlani. One is on the non-piping business. Now, tell us a bit about adhesives and what did they do? Tell us about the sanitary ware and faucets business. Yes, you had some inventory losses, but how did the business overall go?
So I think adhesive had done an excellent number. Our India operation had delivered almost 18%. Our UK operation had delivered around 15% kind of growth. The combined number is showing low mainly because of the paint business. Because paint, we are doing a lot of corrections. So paint has degrown by almost 5%. So because of that, the overall growth we are seeing it's a 14-15%. But otherwise, our adhesive business has done a good job. And not only the improvement into the revenue number, but there is an improvement into the margin. And from here on, we feel that the chemical prices are bottom out. So from here on, we are expecting that it should improve from here on. And that is going to help us in the coming time. So we are expecting little improvement in the margin into adhesive business in the coming time. And UK, we have done a lot of corrections. And we have added a big ticket client in our side. So we are expecting that the UK should give us the good number in the coming time. Some improvement you will see in H2 and much improvement you will see in the next year. We are expecting a sizable growth in the next year, because the way they are adding the new client and bigger ticket client, that is going to help us in the number in the next year more, and even some effect you will see in the H2 also.
Okay. One final macro question, Mr. Savlani. I remember about a year and a half or year ago or year and a half ago, you told me that there is business, but there are no containers. Freight costs had gone up through the roof, etc. Now, a statistic today told us that because of the Israel-Hamas war, the sea freight rates, etc., have all shot up. We know that oil prices have certainly moved up, and therefore some of those ancillary costs are certainly rising. Are you sensing that in business as well, or so far things are manageable?
I think so far it's not that effect, but that is why I said in the initial communication that we are expecting that now the polymer prices start moving upward because of this region only. I communicated that ultimately may not be reflected immediately, but over a longer period of time, 3-4 months or 6 months down the line, it is going to affect. And if the crude is going to go up so much, then the ultimately polymer is a derivative of the crude only. So that is also going to go up, and that is why I say that we are expecting that Q4 onward the polymer price start shooting up, and that is going to help us in the inventory gains and all these things. But all these things are subjective. I am not an expert into that side, so it will be too difficult for me to comment on that side. But this is my limited knowledge of the business, or you can say the understanding of the things, and I am communicating. It can be go wrong also.
No, which is fine. So one is on polymer, but sorry, I just extending my last question. Would your freight costs or transportation costs get negatively impacted? If not now, then could they get negatively impacted in the busy festive season because of the higher oil prices and higher freight rates?
No, I don't think so, because India, the crude prices are stable. Our majority of the business, 99% of our business is in India only. So on the final product side, there is absolutely no risk to us. As far as the import is concerned, normally most of the import are CIF basis. And on CIF basis, everything is included into that. And that side, we are not seeing so much of improvement as of today. Maybe down the line, it may go up. But as of today, we are not seeing. And I don't think it is going to affect too much to the Indian economy.
Got it. We'll leave it at that. Mr. Savlani, congratulations on a good quarter and all the best for a strong second half.
Thank you. Thank you so much, Neeraj, for calling us.
The pleasure was ours. Viewers, thanks for tuning in.